Here we go. Stocks at Matt and the numbers. Welcome back. We're doing a quick update. QuantumScape Corporation, symbol QS on the New York. Stock closed at 6.5, up $1.32, up 25.5% on the news of delivering apparently low volume of their cells, a handful. And this company, just a quick recap here. This company came out a while back, of course, during 2020. That was the EV battery cell craze. And you can see, of course, initially pops up, drops down a little bit. Kids get the stimulus money. Stock runs from $11 to $132, as they do. And then basically goes in a downtrend for the last 4 years. And this is why I just wanted to showcase again, because over the kind of lifetime of the chart, minus this flash breakout, over the lifetime of the chart, in my opinion, it looks like you can make the argument for a very long-term descending triangle, which basically just driving home the point of you kind of have to look at a little bit of everything when you look into these stocks. Now, granted, those of you who are just doing, options trading over the course of like a day or two, not even, but, if you're just looking at the technicals, you're catching the swings, the pops, the drops. Obviously, we know tech analysis may be a little bit more heavily weighted. But if we're talking about an actual investment, unfortunately, you get out what you put in. That's what the saying is. And what that means is, if you just pull up like stock twits, you see people are bullish on it, so you buy it. That kind of half-assed analysis, you may get some half-assed returns, right? But if you really dive into the situation and you look at the technicals, you look at some of the fundamentals, you have to also look at, in my eyes, some recent news on the company. How do some analysts feel about it? And also, more importantly, what is the company itself saying? And, what is their timeline? When do they feel that, whatever, their facility is going to be, completed construction on the facility? When are they actually going to pump out samples? When are they going to actually be in production? When do they expect to start signing clients? Right? So, unfortunately, that's due diligence. You have to look at a little bit of everything, in my opinion. You can't just look at one thing. And I know that was a big prologue to this following point, but again, in my eyes, kind of look like a 4-year, well, 3.5-year, I guess, descending triangle. Maybe you could make the argument for a wedge. I don't know. But in my opinion, look like a descending triangle. And amazingly, right at this apex, as these earnings come out, we, of course, post a slightly wider than expected loss, as usual. And then, boom, today we get the news coming out of them delivering a handful of their solid-state batteries to some automakers. So I appreciate the fact that investors are pumped about this situation. And again, I'm not trying to rain on your parade too much. Even though, fair warning, I'm probably going to say some things that you don't agree with, that you don't appreciate. So stocks up here at 6.5, right? Market cap $3.33 billion. Apparently the company's worth more than SoundHound. Just putting that out there. We have a company that is consistently reporting wider than expected losses. And apparently all of this is getting glossed over because now, after 4.5 years of going public early for no reason other than to probably line their own pockets, in my opinion, the company has a random reversal off of the technicals. And we finally now, at the tail end of 24, delivered a handful of samples to automakers. Again, as we see, the company's losing 120 million, roughly a quarter. Talking about they reaffirmed their guidance of losing roughly 280 to 300 million for the year. But let's look at the news. Let's look at why it popped today. Let's look at the catalyst. So QuantumScape surges after shipping cells to car makers. Shares of QuantumScape added about 20%, recovering some of a recent slide after the solid-state battery upstart said it shipped some of its high-performing battery cells to auto industry customers. QS is part of a generation of clean energy startups trying to turn promising technologies into viable businesses before burning through their cash. Like Lordstown Motors, symbol RIDE, which I said I wouldn't touch with a 10-foot pole. Video got dislikes. People told me I don't know what I'm doing. Don't quit my day job. I should get a job at McDonald's. Company went out of business and is no longer listed. The company's batteries offer better performance that could enable faster charging and longer ranges for electric cars. Okay. All right. See if we get some more news. Said it started production of low volumes of its first B sample cells, which are being shipped to automotive customers for testing. So low volumes of sample cell. So in my opinion, what? Would you make like 5, 10 and ship them out to a handful of companies? Now again, I'm not saying it as like a pompous, piece of S, but realistically, this is not too exciting. And in my opinion, I'd wait for the feedback before I'd pop the stock 20, 30%. And what I mean by that is, let's say you sent out 5 samples. Now, if 3 weeks from now, we hear that 4 out of 5 of those companies really like this product and will consider putting in a sizable order in whatever, the end of 25 when they're ready to produce them, or whatever the timeline is. Then it would make more sense. Because then we'd be sitting there saying, okay, they're ready to produce. All of these companies just came back and said they like it. So probably at least, 200 million in revenue could be coming in over the next 6 to 12 months. So, now we have to reanalyze and reevaluate the situation. Right? It would make more sense, in my opinion, anyway. But also on the flip side, people are so pumped about this news that they sent out a few samples here. What if, unfortunately, it comes back on the negative side? What if they sent these out to 6 or 7 companies and only one comes back and says, like, yeah, we were impressed, we might put in an order down the road. Like, now the stock's going to massively start heading in the other direction, right? Because that's very underwhelming feedback. So, in my opinion, I understand. I'm not saying that the stock shouldn't have went up today, but in the numbers, it definitely should have went lower and bottomed out even further before having this pop. So again, I do feel the stock should be up today, but at 6.5, in my opinion, stock is overvalued here in general as a company at, almost $3.5 billion market cap. No way. The company said in a letter to shareholders that the production start was its, quote, most important goal for 2024. What do you mean the most important goal? We've been sitting here for 4 years waiting for you to get to this point. It should be the most important goal. It should be the goal, I mean. It shouldn't be the most important. It should be the goal. Number 1 priority. Pull up the agenda. There's one thing on the list. Get this done. That's my opinion. That's the way I would look at it. So I just found that funny. That was our most important goal. It should have been the only thing. Should have been the only thing on the agenda. So what you're telling us is after 4 years, and now, of course, dealing with class action lawsuits, as all of these new companies do, because they like to go public, line their own pockets, years before their product is ready, their facilities are built. I mean, it's the easiest way to basically instantaneously become a retiree. You just make some startup and then try to get listed public. Company reported a Q3 net loss of 23 cents per diluted share, unchanged from a year earlier. QuantumScape also said it's on track for a full year adjusted EBITDA loss of 280 to 300 million within its guidance range. I'm sure it is. I am sure it is. Company hit a crucial milestone. While the adjusted EBITDA loss of 71.6 million slightly exceeded expectations, which happens every single quarter, it didn't faze investors. Well, it should have, in my opinion. Instead, all eyes locked onto the breakthrough potential of the QSE5, an next-gen anode free solid state lithium metal battery. My apologies. With over 800 watt-hours per life? I'm not sure exactly what that means. I'm sorry. Energy density and ultra-fast charging, QuantumScape positioned itself as a serious contender in the race to redefine EV batteries. Well, that remains to be seen. That's quite a bold statement. Took them 4 years to make 3 samples. Now they're gonna redefine the battery. Let's take it one step at a time. The buzz didn't stop there. Management kept the momentum going by reaffirming full-year guidance, sticking to the original 280 to 300 million range, despite some higher-than-expected expenses. Investors zeroed in on the company's progress with its cutting-edge separator production technology. The Raptor process is already up and running, setting the stage for the Cobra process, which aims to ramp up capacity to gigawatt-hour scale production by 2025. Strategic moves like these are fueling optimism that QuantumScape is on track to deliver at the industrial scale needed to disrupt the automotive battery landscape, especially with Volkswagen's PowerCo as a key partner. Wow. In my opinion, I mean, I love this wording and the way they're laying out, what they're looking at here. Tell me you own the stock without telling me you own the stock. That's the way I'm looking at it. The surge in QuantumScape stock wasn't just about hitting milestone, it was about the hype around what's next. The B-sample phase signifies more than just progress. It signals that the company is inching closer to commercial reality. It's about time. Investors are betting big on QuantumScape's ability to accelerate the EV revolution with batteries that promise longer range, faster charging, and better safety. Again, not to compare it to a negative, but I could have swore we read something similar with Rivian, I think it was. And then a bunch of the vehicles were on fire. Now, again, I understand that could have been an isolated incident. Maybe it wasn't Rivian. I'm thinking of another company. And, of course, you can say, well, it has no connection. One has nothing to do with the other. I understand all that, but you also understand my point. We've been hearing the same adjectives to describe these quote-unquote green, clean startup companies for the last 4 straight years. And half of them are out of business or are down 90+%, and investors are foaming at the mouth looking for blood. So, again, like all this, yeah, it sounds great. I'll tell you what, I'll believe it when I see it. I would personally wait for the money. But that's just me. If the company can keep executing, this stock has the potential to be a major player in the rapidly growing sustainable energy market. I bet it does. And I bet your boss told you to speak highly about it. Let's look at the actual earnings results, which apparently no one pays attention to anymore. The company has made significant strides in its commercialization efforts, particularly with the production, yes, QE, yes, 5 sample. GAAP loss $119.7 million. Net loss of $110.6 million in the same period last year. So with still doing nothing, we're losing now $9 million extra. Company adjusted EBITDA loss was $71.6 million, aligning with expectations. Capital expenditures, CapEx, for the quarter were $17.9 million, primarily supporting equipment purchases for low-volume prototype production and preparation for higher volume production in 2025. So this is why, again, looking at this time frame, seeing what the company just finally achieved today, again, good news. If you're going to tell me, oh, this could be big, it could go lower, but I'm just going to be buying, and, by 2028, it could be back up at, $15, $20 a share. It's going to be great. Something like that, I can understand where you're coming from. I can. But, again, we have to keep an eye on the time frame. And that's why something like ASTS, perfect example, right? Because a lot of people called me out when we looked at it, when they reported those earnings, and the stock was at like 240, I think, or maybe something like that, 250. And I said, in my opinion, I didn't see urgency, and there were still like a couple of weeks of time before they were going to complete those satellites and then deliver them, right? And you guys recall, obviously, that every time an update came out, the stock took another leg higher. So in that short-term moment, that was a bad call. But if you go back to the original ASTS analysis video that I put out, I believe it was about this time last year, October 23, we looked at their time frame that they laid out for us. And they initially said, I think, like April or May. And I said at the time, I said, based on their time frame, you have no urgency to buy this stock for about 6 months. And then as you approach April, end of April, that is where, in my opinion, I would consider taking a position. So again, I know sometimes I come out of left field with these lessons, or, trying to talk about something I did incorrectly in the past, and how maybe you should look to do it in the future. I understand I'm a little unorthodox here with the way I lay it out, but again, the point is, when we just originally took a broad look at the company, we looked at their time frame, what the stock was worth at the time. I came to the conclusion that you have time, you have no urgency, you had until April, you could probably get it for a lower price, and that's the way I would play it. And the original broad overview analysis was dead on accurate. And in the immediate short term, again, I just saw that we weren't at the time frame and the company still isn't generating revenue, so I felt that, if it stayed flat, it would make sense to me. So that's why I personally saw in that immediate short term, there may have been no urgency. But also at the same time, I put out a lot of videos and I try to look at almost every symbol you guys ask about. And to be quite honest, a lot of times the news kind of runs into each other. And, I'll think I read something about one stock, but it was really about a different company. You understand what I'm saying? So, again, I know you guys want to hold me to high standards, and believe me, I hold myself to high standards. That's why when I get anything incorrect, I'm very upset at myself. But I also didn't even remember that we looked at it in October. That was the main point as well. So a lot of people caught that big surge, within the last couple of months, and they tried to say, haha, you said no urgency, stock's up, 300, 500%. But at the same time, when I originally looked at it for you all, I was correct. So this is why, again, I basically bring up that entire story for this, right? Preparation for higher volume production in 2025. So that is when you should look to buy. And I know you're going to say, well, the stock just popped, it broke up, 6.5. What if it runs to $8? I understand, but also that could be in the short term, and it could be very short-lived. So if you buy in at 6.5 and the stock goes up to 8.5, but you don't sell, right? Because everyone's going to be pumped, saying that it's going to start raging. What if it stops at 8.5 and pulls down to 4.5? You understand my point? And then the articles might come out and say, oh, well, QS, quieted down because, investors are waiting for March of 2025 for them to ramp up production, right? Now, all of a sudden, this catalyst is short-lived, gets swept under the rug, and now we go back to the main focus of the company's timeline. You understand? I hope that made sense. So that's why, in my opinion, right now, off of this news, if you want to short-term trade it, oh my God, excuse me. If you want to short-term trade it, you want to make yourself another quick 10, 20% off of the momentum, then go for it. In my opinion, I wouldn't buy it at 6.5. And I really don't care if it runs to 18 and pulls another ASTS. I don't care. In my opinion, I do not feel comfortable owning shares of this company in its current condition at a $3.3 billion valuation. That is just me. Okay, yeah, we achieved a milestone. Fast charging capability from 10% to 80% in less than 15 minutes are now being shipped for automotive customer testing. Now, correct me if I'm wrong. Those of you who own Teslas, let us know in the comments section below. And also, I think it was a clip I saw, Elon Musk, I think one of the times he was on the Joe Rogan podcast, and Joe was asking him about like how long it takes, what are people looking at if you want to, plug it in, charge it up. And he was saying, I believe he said you can go from like 0 to like 80% within about 20 minutes. And then he was explaining the way the battery charges, and the last 15, 20% to get full is going to take, significantly longer than the first 80%. I believe that's how he laid it out. Correct me if I'm wrong. Let us know in the comment section. But I believe he said 0 to 80 in about 20 minutes. So this company's saying that they're supposedly, quote unquote, groundbreaking, revolutionary batteries, 10 to 80% in less than 15 minutes. So technically, it is a few minutes less But at the same time, is it going to turn the whole EV sector on its head and flip it upside down? And now have all these automakers stuck between a rock and a hard place to where they have to use QS's solid state batteries? You understand what I'm saying? So I think, in my opinion, if it was less than 10 minutes, now we're talking about something completely different, right? Now we're talking about less than half the time. That could be huge. But also, at the rate at which I feel that Tesla's continuing to innovate and improve their software and their hardware, I just don't know how impactful this can be. Especially since they're not even currently doing it, right? They might need another 8 months, 12 months from now to actually ramp up production. And then, as we laid out, we don't know yet the feedback that we're going to get. So 4 out of 5 may really like it and may say they're going to give QS orders, which of course should send the stock much higher. 4 out of 5 may come back and say they're not interested. Now, this may have all been for nothing. So this is why I feel only time will tell. I would personally wait for a little bit of a clearer picture here. But again, if you're involved, you heard about this news, you're pumped, you're looking forward, 3 years from now, it doesn't matter what you paid for it, it's going to be huge, then okay, awesome. Again, you guys know, I wish all of you the best of luck. I hope everyone makes money. But I have to call it like I see it. Highlighted its collaboration with PowerCo, the battery manufacturing subsidiary of the Volkswagen Group, to bring QSE5 tech platform into mass production at the gigawatt-hour scale. Includes a $130 million royalty prepayment, which technically they already burned through, contingent on satisfactory technical progress. Company is also advancing Cobra, targeting production in 2025. So that's what I mean. So if you tell me now, it sounds like 25 is going to be even better than 24. And yes, everyone was pumped about the news today, but in February, March of next year, you're going to start looking to buy. Then in my opinion, that makes much more sense. Again, ASTS, perfect comparison. We originally looked at it. We originally saw that we had roughly 6 months before we kind of had to, quote unquote, buy shares with urgency. And that's kind of around the time that all of these news articles and these catalysts and these updates started to come in, and the stock just started to chunk higher. QuantumScape extended its cash runway forecast by 18 months into 2028, driven by the PowerCo agreement and other capital-efficient measures. Okay? Stating it represents a new high watermark for the battery industry. Reiterated company's commitment to achieving its long-term goals through enhanced manufacturing processes and deep collaboration with partners like Volkswagen and PowerCo. Company lowered CapEx between 60 and 75 million. So, of course, we have some good news, and we definitely have some red flags. Again, I have to be honest. And it's funny, shout out to, who was it? Let me see, I'm going to have to go all the way back to when this was. Bear with me. Because when people reach out, bring something to my attention, mention something I wasn't aware of in the comments section, I always try to give you guys mentions. I'm sure you guys want an update on Rocket Lab as well. Nick Moreno, shout out to him, asked for an update about a week ago. I'll get to it. I will get to it. Okay. For some reason I can't find it. Here we go. GJD5979, shout out to them, because they basically asked about this price target update a week before earnings came out. Basically saying how are they able to come out, why'd they come out right before earnings, lower their price target from 7 to 6, maintaining a hold, but they did it a week before earnings. That was on the 16th. Earnings came out the 23rd, as we see. And they were saying that, is this, price manipulation of them coming out early? with that report. And honestly, who knows? Who knows? But again, when you guys mention something, I try to give you your credit, your mention. People are selling shares. 47.5 million settlement with investors because, again, we apparently go public, promise everyone the world, burn through hundreds of millions of dollars for 4 or 5 years. So yeah, people get pretty upset and they start to file class action lawsuits against these businesses, saying that they misled them about the efficiency of their product. They misled them about the finances. They misled them about the timeline that they laid out originally. So this is why, again, I feel like it's such a pain in the ass to do it this way. But whatever. I get, if obviously this is the way to do it, since it instantly brings in huge capital into the business. So of course they're just going to keep doing it. But price target announced $6 by Deutsche Bank. This was about a month and a half ago. Let's look at analysts feeling right now. 10 analysts covering the situation. 1 strong buy, 6 hold, 3 strong sell. Price targets as low as 4, as high as 10. The company consistently reports a loss and apparently is always missing Wall Street's expectations, even though apparently this is now being glossed over on the fact that they sent out, 3 samples or 8 samples. No revenue. Somehow for the year, though, they're able to come in above analyst expectations on the loss side, which kind of throws me for a loop here. I don't see how you can miss every quarter but beat on the year. That doesn't make sense to me. But also, look at this forecast. For 2026, right now, you're saying 6.6 million. And then by 2027, it has a big jump up, but it's only to 58 million. So what am I missing here? They're saying they're going to ramp up high volume production in 2025. But what? No one's going to want it? They're supposedly, again, revolutionizing this groundbreaking green technology. So if this is coming out in 2025, then 2026, in my opinion, I would put my goal at least 40-50 million for the year. So this 2027 forecast, in my opinion, would be my personal goal for 2026. In 2027, I would have to break over 100 million conservatively, if not the $250 million mark. That's my opinion. Because this will be anyone who is initially interested and wanted to give me a shot, and this would be how the word spreads, how the data is there, how the customers say how more efficient and how more worthwhile my product is. So the growth from my sales team from 26 to 27 is going to be astronomical. I'd be looking for 300 to 500% growth in sales revenue from 26 to 27. But again, that's just me. This is why I do actually wish that I had like a photogenic memory, so I could just read everything, absorb it all in perpetuity, and then go on the board of directors somehow for like 80-90% of these businesses, because I'm telling you, I would turn this crap around. But again, I'm not trying to crap on your company. I'm looking at this is their forecast, right? 58 million by 2027. So let's say hypothetically they were bringing in 58 million for the year right now. Is the company worth $3.5 billion, bringing in 58 million a year? No, they're not. And on top of which, they're burning over 100 million a quarter. 300 million for the year, whatever it is. So bringing in 50, 60, 100 million, that's not really going to do much. So of course, for shareholders, I'm hoping that this growth and acceleration in revenue comes significantly sooner than this. 2027, off of that 58 million, we'd still be losing 58 cents a share. Again, in my opinion, I don't see it. In my opinion, I don't see it. And I know I get some right, I get some wrong on this channel, but again, something like Lordstown Motors, I said at the time, there's no way they can all be successful. There's no way they're all going to be the next Tesla. We said that. And, of course, I understand you guys get emotional. You wanna jump into shares early, get in on the ground floor, and in a few years have it become the next Tesla, to where you can say, holy crap, I knew it, I made a great call. Now all of a sudden I have this position's worth hundreds of thousands of dollars or whatever, and I started with just, 10K, and I knew it was a buy, and oh, I'm so happy it worked out for me. I hope that happens for all of you. But the problem is, you can't give that type of credit and that type of potential to a business that doesn't deserve it, that doesn't warrant it. Tesla was a unique situation. They're getting tax credits. People love Elon Musk. How many young people made 50, 100 grand off of buying Tesla stock? So then they kind of returned the favor and bought a Tesla, right? So it was kind of like this perfect storm that turned it into a huge hyper growth situation. And we look at the other companies like your Rivians, NIO, Lordstown Motors, again, perfect example. And people saying, oh, did you even see the cars? You don't know what you're talking about. You're just negative. You're a pessimist. No, I'm a realist. I'm a realist. And if their cars were that good and I'm a schmuck, then guess what? The company would still be in business. So that's why, again, just because a company makes solid state batteries or a company says they're a clean green energy company, that doesn't mean bucks. We want to see the proof in the pudding. That's why, in my opinion, you can never go wrong if you follow the money, if you follow the revenue. Right now, in my opinion, I'm not seeing it. Switching over to stock charts, I'm talking for way too long. RSI now almost at 70, sitting at 67 on the daily. Stock slightly broke up above 7 and then had a hard rejection to close at 6.5. We had kind of some tightening taking place on the B bands. You can see now with the big pop, we trumpeted out. The low today was 605. 200-day moving average 603. So it technically didn't even test that 200-day. Opened above it and stayed above it all day. We're obviously above the 50-day, 568. So we may again try to run back up and retest that psychological level of 7 tomorrow, but then the RSI may be viewed as overbought, and then people may start to jump out and take profits. So that's why I'm saying we could see more momentum, 7, 7.5, maybe even $8. Right? Where was this gap? Right here. Yeah, this looks like about 748 or something. So that might be, in my opinion, where the stock can run up to. But then it realistically should pull back. The MACD, of course, on this news did cross back to the upside, so that's going to help add maybe for more gains over the next day or two. On the weekly time frame, we're now above the 50-day moving average, currently on the close at 6.5, moving average 619, 50-day. And top Bollinger Band on the weekly, 776. And we were just saying, in my opinion, about 7.5. So maybe this might be where it goes, which would still technically be lower highs, which would maybe continue the downtrend, which is why I'm saying, again, not to rain on your parade. It may continue to climb up, but it may be short-lived, and it may start to give it back as people look, excuse me, as people start to look at the fact that the company is still burning through cash, the fact that the company is saying we're not really going to be ramping up production until somewhere in 25. You understand? So people are going to reassess the situation after the short-term catalyst loses its allure, so to speak. That's the way I'm looking at it, in my opinion. So if all of a sudden the stock rages up and gets back to this moving average of 15, then obviously, in my opinion, I completely disagree. But what are you going to do? It happens. RSI 54 1/3. MACD, of course, looks like it curled back to the upside, and people love the short interest. Short interest on the stock currently on FinViz, less than 16%. So that's why, again, you guys like to jump on these situations. 16% is not that much in my eyes. If it was like 36%, now we're talking about a different situation. You may see a squeeze back up to like that 10 SPAC level. Higher, probably, if it was, that much shorted. But 16%, doesn't seem too wild. So I don't necessarily view that as a catalyst on this situation. But, in my opinion, I laid out how I feel. And even if we look at the numbers very quickly, we can see that debt is almost 100 mil. Free cash flow minus 110.73 mil. This time last year, minus 80.5 million. So the free cash flow is negative 30 million more than this time last year. Cash right now, it says 174 million. I know the company stated they have about 800 million in cash. We do have assets outweighing liabilities in both the short and the long term. Equity slowly getting chipped away, now down to 1.11 billion. So the debt about 100 million. If we subtract that from equity, you're looking at about 1.01 billion. They said they have 800 million in cash, so you're looking at about 1.8 billion in change, in my opinion, as fair value of the business. But because they're operating at a loss and taking losses every quarter, in my opinion, you wouldn't put a multiplier on that. So I feel personally it shouldn't be trading 2-3 times that $1.8 billion number. And we can see now we're almost 2 times at 3.6 billion. And also it's funny because the enterprise value, which again is what another company would be willing to pay for this company, you can see right now, interestingly enough, is sitting at almost my personal fair value. It's sitting here at 1.88 billion. So that's why right now I feel, again, it could run up in the short term a little more, but in my opinion, I wouldn't be a buyer. I'm sorry. I would not be a buyer right now. All of these numbers remain unchanged since we're not generating any revenue. We don't get paid a dividend. There are no earnings. We're consistently losing more than Wall Street expects, but apparently it's okay. There is no revenue. That's pretty much it. So I'll end it there. Once again, this is Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But of course, more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.